And I actually wanted to show for our terminal subscribers and viewers who can see this, Gary, a chart that is showing, even though what Yvonne was saying about potentially looking into CSI 300 as a buy, the bears are very much prowling, and this index getting close to bear market territory, which didn't even happen during the pandemic. Gary, in your view, are you looking at China as a buy here, or are you staying away?
I was staying away. I think you've got to be patient. I think the concern would be in the kind of amongst mutual funds is that retail investors and indeed institutional investors here may want to unwind some of the positions they've held. As you're hearing, some of the brokerage houses taking the market weighting of this part of the world down from an overweight to neutral to underweight. So outflows will do some damage still to the market.
And it's this concern as well about how long it's going to be, what kind of contagion, and you're talking there about outflows too, which a lot of traders have been warning about, because it's not just the retail and momentum dip buying, it's the larger overhang here. So I guess how long does it last, and what kind of concerns do you have about contagion effects?
Yeah, I think there's a reset here in terms of people's expectations for how do you invest in China and what percentage of your portfolio it should be in. The immediate knee-jerk reaction is to sell, move away and wait. But then I think people will be, like ourselves, will be waiting for information from the government, just saying, what is the philosophy that's pushing you to make these changes in the way in which you regulate businesses? Do we expect that you won't allow companies to make extraordinary profits at the moment? As I said, I think it's very difficult for people outside the country to understand the nature of what's changing here. And until we get clarity, I think people will be more circumspect about investing.
Yeah, and you wonder, right? A PBOC liquidity injection yesterday. You have all this job boning, and it's still not enough to bring a little bit more of a lift to these markets, Gary. So I have to wonder, if it's not China, if you're sitting in the sidelines right now, where do you go to? You hear people say it's Japan, potentially EM. You look at India, Southeast Asia. What's your take?
I think the rest of the emerging market bloc can only benefit from this, but clearly they need a good story. And the lack of vaccinations and unfortunately, the COVID still ravaging some of these countries, it just makes that a little bit more difficult for people to say, I'm going to jump into Indonesia, Thailand, or Philippines at the moment. But I do think India, which has performed very well, could still benefit. I think people feel that the kind of bad news is known. And this is a country that will benefit from maybe, industrial companies looking for somewhere else, either manufacturer, a service sector hub, other than or diversifying away from China. Because let's say with China is under such great uncertainty, it's not just investors, but it's also corporates as well, who may change their corporate strategy to invest more heavily in other emerging countries.
And Gary, we're watching this whole sort of sell-off. It's not just in North Asia. I mean, Southeast Asia, it seems to be very much in focus. It's still the COVID-19 concerns. When do you think the market starts to kind of shift their narrative and how they approach these types of the markets? Because it seems like, we've been talking about how the UK is that test example where you have a blow-up of cases, but fatalities are not as bad. So it is a sense that perhaps long COVID is a good strategy. I'm just wondering, at what point does that actually shift to this part of the region?
Yeah, I think India is a good case study because, that market was obviously really on its back. The country was on its back, a really torrid time with COVID. And although COVID hadn't materially improved, we got past the peak, that market started to perform. And I sense that when people look at US and Europe, they've already performed extremely well year to date with substantial gains. And then look, if you're going to continue to commit money to the markets, you're going to look for value. The value is in Southeast Asia. It just needs a modicum of better news. Whether the vaccination rates improve remarkably or we start to see cases of either mortality or hospitalization dropping. And, we could just be a few months from there. So as money comes out of China, it's got to find a new home. I'm not so sure people want to chase the United States. There's certainly money that could go into Europe. I still think there's a good story there. But I do think the other Asian markets will benefit, certainly before the end of the year.
So Amazon is slowing, Gary. Should investors start worrying?
I don't think so. I think this is obviously just a change in pattern of spending rather than an absolute fall. In fact, if you go to the Q2 GDP numbers, they showed a huge increase in consumer spending overall, around 10% quarterly annualized. So, as I said, I think it's just a changing mix of how people spend rather than their enthusiasm to continue to support good GDP growth.
Gary, when we look more broadly at earnings, something like 85% of the S&P 500 have beaten. What does that tell you about valuations? Have we kind of priced in the best news so far?
I don't think so. I mean, it wasn't just that we get that ordinary surprise. I mean, every quarter we seem to get surprises to the upside. But I think that, the scale of some of the surprises was very positive for the market. And I think although we might go through wobbles as we go through the next couple of weeks, given that the market had run so strongly, certainly over the last couple of months, I think it is justified by the upgrades to earnings forecast that we see pretty broadly across the market. And also, given that I think there's something still in the tank, even after a strong GDP number for the second quarter, it could be the third quarter gives us a really quite a pleasant surprise. And then as we go into the fourth quarter, the hope is that vaccinations and other things give us another boost to growth.
All of this playing into the Fed as well, which we heard from this week. Kind of interesting that even though they maintain that they're looking very closely at the path of the virus, the Delta variant, in terms of when they can start to taper, they did remove that word. The path depends significantly on this. How did you read the Fed? When do you start to expect some tapering?
Yes, I think my worry is that they're still being very, very slow to react to the inflation we've got. Which is a huge number, and I don't think it's going to come down as rapidly as many thought maybe a few months ago. And secondly, we could see an acceleration of employment growth as companies become more confident with the cycle of improvement in growth. So there could be that day just where the Fed almost kind of quite frankly wakes up and says, you know what, we better tell the market we're going to taper. And I just feel that leaves the market very vulnerable from these very low yields that we're in the market today. We're trading around 125, 130 on the 10-year bond yield, where I think it should be close to 170, 180. As we travel that distance, it could be quite painful for the market, add to the volatility, which I just don't think I just think the Fed needs to be a bit more careful with their dialogue at the moment, because it could be just one day we all wake up and say, we've got a problem.